Well, we're getting deeper into our trading session now, and things are just kind of settling down a little bit from their open. Let's see how they're doing. Let's start with the corn market right now, and our quotes provided by Bar Chart. Well, corn, after actually hitting the skids a little bit after we opened up, it has now stabilized, and we have the March corn a penny higher. We're now trading at $5.48 per bushel. The new crop December corn now 2 1/4 higher, and we're at $4.47.5 per bushel. So it's been kind of choppy to get things going here today. On the soybean trade right now, narrowly mixed. March is up 1/4 cent at $13.70 1/4, and we have September now 4 1/2 cents higher, and it's showing a last trade of $12.04 per bushel. Wanted to point out on that November new crop soybean contract, let's see what it's doing. Of course, it's trading at a big discount to the nearbys. It's at $11.48 1/4, but it is 5 1/4 cents higher so far this morning. Now, the wheat market really got hit on the chin at the opening bell this morning. Let's see how the Chicago March is trading. We're 6 3/4 lower at $6.56 1/4, but it has rebounded 4 cents from its early open. Let's see how the Kansas City market is doing. A lot of pressure here yet. We have March down 9 3/4. We're trading at $6.28 1/4 per bushel. The July contract down 8 3/4 cents right now. On the Minneapolis wheat, spring wheat, March is down 5 1/2 cents at $6.28. And in the cotton market so far today, you have that March contract showing a last trade 45 points higher at 81.09 cents per pound, so back up above 81 cents. Let's bring in Chris Swift of Swift Trading Incorporated in Nashville. And Chris, as you look at the open here on the grains, we had some overnight export sales that came in. Wanted to take a look at them real quickly here. We had a couple sales of corn, but they weren't too big. 125,000 tons to Mexico, 110,000 tons to Japan, and 133,000 tons of soy meal to the Philippines. Market seems to be ignoring it this morning. How come?
Well, I'm not real sure that it's ignoring it. It's just kind of we have assumed that with these export sales would continue, and they have. So I think we have done a lot in the corn market by continuing to push to new contract highs. Remember, we're probably starting to ration a little bit of grain now. So even though we are getting a little bit more export sales in there, it's not having quite the same price impact as what it has before.
We did actually make new contract highs, correct, last night?
Yes, it's true. In the March contract, we did.
Okay. So how important is it that that market hold together now?
Well, I think it's probably not crucial because we're still in a demand-driven market. We're a long way away from any kind of supply issues from here in the U.S. as we get into the planting. South America hasn't seen too much change in their weather, so they're still status quo. So this is all still just a demand-driven market, and a bull market has to be fed every day, as they say. So right now there's just not a lot of feed for them.
Well, we were talking about the fact that November soybeans were over a nickel higher. The nearby March is actually down a penny. They're really changing that spread and narrowing that up quite a bit here this morning, about 6 cents that they're narrowing it up. It looks like there would be a lot of room to do that. Huh?
Yeah, it does. And the spreads between the months are very, very interesting. This is the first time we've seen full carry all throughout the board in a long time. So clearly there is some demand out there for the product, as there is no need to store it right now, the highest prices right now.
Okay, we'll take a look at that livestock trade when we come back in a moment. Our guest is Chris Swift, and we'll have more right after this. We're back to talking with Chris Swift of Swift Trading, and as we change our focus now and go to livestock, Chris, we had that cattle inventory report that came out Friday after the market closed, and all in all, it just didn't really have a lot of change in it, did it? I mean, it seemed like most of the categories that USDA talked about in that report were just maybe up slightly or down slightly or whatever, but not even a 1% move for the most part.
And that's true. It was pretty much status quo. And in all honesty, we kind of looked for it to be down just a little bit. We were thinking that maybe we had curtailed the herd by maybe 1.5%. We noted that the heifer placement was still high all through, heifer placement was low all through of last year. And we had a little bit of an elevated cow kill, so maybe the difference between the two were a few extra bursts of calves in there and not quite as many cow kill out there, just kind of kept that number very even.
So it looks like basically all categories were, let's just call it 100%. Excuse me, the changes were so small. But the calf crop overall was down 1% at 14.2 million head. Let's take a look at our current prices then. On the live cattle board right now, it looks like we have a little bit of firmness on the nearby contracts, but just ever so slight. The April contract up 15 cents. We're at 122 even per hundredweight. June up 22. The deferred steady to a little bit weaker on the feeder cattle market right now. Early on, it seemed like maybe they were going to hold their own, but now they're falling back. We have March now at 137.10 per hundredweight. That's down, well, now 136.95. That's down 77 cents, and within 15 cents of our low of the day. It had been at 138.50 for the high earlier today, and now we've given back over $1.50 now already. The April is down 25 cents, and looking at the lean hog trade, currently you have that February contract 52 cents higher. We're at 70.32. April down a nickel. All the other deferred months slightly higher. Just not much really going on apparently in the livestock trade up to this point, Chris.
No, it's pretty quiet. And, you know, we noted in the hog market that China has rebuilt their hog herd to a significant amount, but the Philippines now seem to be in some issues of pork production. Here in the U.S., we're still about status quo, and I don't see much really happening for the pork market just yet.
If you had to venture a guess, do you think cash cattle trade this week would go higher or lower or not?
I think it'll be steady. Big storm in the Northeast kind of inhibits the consumer from getting out and about, so I can't imagine the packer being under a great need to have to go up there and bid for inventory anytime soon.
And it's just going to get nasty in the northern half of the U.S. this coming weekend. Really, really cold. So that's a good point. Chris, thank you for joining us. Chris Swift of Swift Trading Incorporated, based in Nashville. Janet, back to you.
All right.